For decades, personal finance gurus have hammered one message: sacrifice the small luxuries. Skip the latte, they urge, bring your lunch. This advice, while psychologically satisfying, often distracts us from the truly devastating leakages in our financial ship. The $5 daily latte, compounded over 30 years, might save you $60,000 or $70,000. A decent sum, yes, but not a life-changing fortune in the context of modern wealth accumulation. We must stop obsessing over fractional savings that offer linear returns and pivot our focus entirely to exponential growth. The emotional energy expended agonizing over $5 is completely disproportionate to the wealth generation potential of that decision. If your goal is true financial independence, you are solving the wrong equation by focusing solely on defense rather than offense. Today, we confront the uncomfortable truth. Your spending isn't keeping you poor, your income is.
Let's break down the math to establish clarity. Saving $5 a day results in $1,825 saved annually. If you consistently invest this money and achieve a 7% average annual return, after 10 years, you have roughly $25,000. Now, consider negotiating a one-time $10,000 raise at your job. Assuming you are salaried, that single action immediately generates 4 to 5 times the annual gain of the latte savings, and that new, higher base continues to compound every year with subsequent raises and bonuses. The income focus offers leverage that spending cuts simply cannot match. The problem with microfrugality is that it's a fixed resource. You can only cut expenses down to zero, but your income potential, especially in a knowledge-based economy, is virtually unlimited. If you save $100 this month, you cannot save $1,000 next month without a radical change. But if you increase your income by $100 this month, the potential to increase it by $1,000 next month through job change or skill acquisition is very real.
If the latte isn't the problem, what is? The silent wealth killer is lifestyle creep, specifically concerning high fixed costs. As our income marginally increases, we often allow our three major expenses, housing, transportation, and food, to inflate disproportionately. These three categories typically consume 60 to 75% of the average American household budget, yet these are the areas where people are often least disciplined. Unlike the latte, which is a manageable discretionary expense, an unnecessarily large mortgage or a high car payment locks you into years of financial servitude. These massive fixed commitments choke your cash flow and prevent aggressive saving and investment. We focus on clipping coupons for groceries, saving perhaps $50 a month, while ignoring a $400 car payment that could be eliminated entirely. The small, visible expenses become a financial fetish, while the colossal structural drains are left untouched due to emotional attachment or inertia.
The fundamental shift required is moving from a scarcity mindset to an abundance mindset. The scarcity mindset dictates that money is finite, forcing us to hoard and restrict spending, leading to burnout and dissatisfaction. The abundance mindset recognizes that the ability to generate income is dynamic, scalable, and the primary engine of wealth. Financial stability comes not from avoiding every minor cost, but from building such a robust income stream that minor costs become irrelevant. Instead of asking, how can I save $5 today? We must start asking, what skill or value can I develop today that will earn me $500 next month? This is the difference between working harder defensively and working smarter offensively. Wealthy people don't budget for small items. They manage capital flow and maximize investment returns. They solve the revenue problem first, ensuring the foundation is solid before worrying about the decorative trimming.
To increase income effectively, we must focus on high-leverage activities and skills. The market pays best not for time spent, but for the value delivered and the uniqueness of the solution provided. Identify skills that are difficult to automate and directly contribute to revenue generation or critical problem solving. Think complex data analysis, advanced software development, specialized sales, or sophisticated digital marketing. These are skills that offer significant leverage, meaning a small increase in your effort or knowledge can result in a massive increase in financial compensation. Investing time and money into upgrading your professional value is the single highest return investment you can make.
A $5,000 certification might feel expensive, but if it directly results in a permanent $20,000 increase in your annual salary, the return on investment is immediate and astronomical, far outpacing any stock market gains or spending cuts.
Now, let's address the big three expenses structurally, because while income is the engine, these massive fixed costs are the brakes. Housing is often the most significant financial hurdle. If your housing costs exceed 30% of your gross income, you are likely overextended. Transportation comes next. Unnecessarily expensive vehicles driven by status or impulse often carry payments that consume 10% or more of monthly income. The rapid depreciation of new cars ensures that this money is lost capital. Finally, food expenses, while smaller than the first two, represent a massive leakage when dining out becomes the default rather than the exception. We aren't suggesting strict austerity, but rather strategic optimization. Attacking the big three is the equivalent of freeing up thousands of dollars of cash flow annually, money that can then be funneled directly into wealth-generating assets, not just minor savings accounts.
Tackling the housing problem requires creativity and often a willingness to challenge societal norms. Refinancing your existing mortgage to secure a lower interest rate is a high-leverage move that can instantly reduce your monthly payment by hundreds of dollars. For those looking to buy or currently renting, consider house hacking, finding ways to monetize the property you live in, whether through renting out a spare room, a basement unit, or utilizing short-term rental platforms. By consciously selecting a property where you can offset a significant portion of the carrying costs, you transform your largest liability into a cash flow neutral or even positive asset. Imagine having 50% or more of your housing payment covered by income generated from the property itself. This singular action frees up thousands yearly, turning an income problem into an acceleration problem.
The most direct path to increasing income is mastering the art of career negotiation and strategic job movement. Understand your market value precisely, not just what you were paid, but what the highest performers in your field are currently earning. When negotiating a salary, never accept the first offer. Always present well-researched quantitative arguments detailing the measurable value you bring. Furthermore, don't fear the job hop. Historically, the largest salary increases often occur when moving from one company to another, rather than relying on incremental internal raises. Switching jobs every few years can accelerate your income growth trajectory exponentially, allowing you to bypass the typical 3 to 5% annual internal raise structure for double-digit increases. Treat your career path like a series of financial transactions, always seeking the optimal return on your skills and time.
Beyond the W-2 income, scaling wealth requires exploring non-linear income streams, often known as side hustles or passive income generators. But be strategic. Avoid side hustles that simply trade low wages for time, like low-level gig work. Focus instead on opportunities that involve automation or scaling, such as creating digital products, running targeted affiliate marketing campaigns, or starting a niche consulting service where you charge high rates for specialized knowledge. The key here is decoupling your effort from your income. Once established, these automated streams can generate cash flow whether you are actively working or not, turning your time into a leveraged asset. While building these income streams require initial heavy lifting, their long-term potential far outweighs the marginal savings achieved by cutting discretionary spending.
Once you have successfully optimized your income and tackled the big three expenses, the final, crucial step is directing that freed-up capital into aggressive investment strategies. The $5 Latte Saver is adding small increments to a savings account. The Income Accelerator is injecting large, consistent sums into diversified, risk-managed assets. Focus on maximizing contributions to tax-advantaged accounts like 401ks and IRAs, and then prioritize high-growth index funds or real estate ventures. The power of compounding only truly becomes life-altering when the principal amount invested is substantial. When your income is high, your investment capacity is high, and therefore the compounding interest works on a much larger base. This is the ultimate goal, using high income to fuel high investment, creating a self-sustaining loop of wealth generation.
In summary, the narrative that personal wealth is achieved through painful sacrifice of small daily joys is fundamentally flawed and limits your potential. True wealth is built on the foundation of high income, maximized through valuable skills and continuous professional development. It is cemented by the strategic management of massive fixed costs, specifically housing and transportation, and then accelerated exponentially through aggressive investment.
Stop feeling guilty about the occasional convenience or pleasure purchase. Instead, channel that guilt and energy into actionable, high-impact tasks, negotiating a raise, acquiring a new certification, or refinancing your largest debt. This reframing allows you to enjoy life's small pleasures while building a truly formidable financial future, free from the constraints of penny-pinching paranoia. Your time is best spent multiplying your earnings, not meticulously monitoring minor outflows.
The journey to wealth is not about deprivation, it's about expansion. It requires recognizing that your greatest financial asset is your earning potential, and the greatest liabilities are oversized fixed expenses that reduce your capacity to invest. Take action this week. Research your market salary, identify one high-income skill you can acquire, and evaluate your big 3 spending for potential optimization. Make the shift today from defensive saving to offensive earning. This is how the wealthy are built, not one $5 saving at a time, but one 5-figure income increase at a time. If this analysis gave you the clarity to stop worrying about the small stuff and focus on the big wins, please let us know. Don't forget to like and subscribe for more updates. Thank you for watching.